Okay, let's talk about one of the items you'll almost certainly see in almost every statement of cash flows problem, depreciation. So depreciation is actually an operating activity item. And what we're going to do with depreciation is we're going to reconcile it in the operating activities section, but we're going to need to understand why and how we reconcile it. So in order to do a statement of cash flows, you're going to need a couple of things. You're going to need the other financial statements. So the statement of cash flows always is done last. So one of the things you're going to need is you're going to need the company's income statement. Now remember, again, this income statement is prepared using an accrual basis. Revenues when earned, expenses when incurred. You can see we have some depreciation here on that statement for the year, $8,000. We're also going to need the company's balance sheets. And typically you're going to need both the beginning or the end of last year and the end of this year if you're doing it for the whole year. So for instance, in this particular case, we also have an accumulated depreciation account, don't we? So now looking at these two balances here, notice in your accumulated depreciation account, notice you have a starting balance or an ending balance of last year of what, $32,000. And that went up to $40,000 at the end of the year. One way to look at this, and if you look back to the notes in the completed example, I just kind of want to show this, is you can look at this by examining these balances in T accounts. And this is really just kind of an easy way to visualize it. So if you look at the accumulated depreciation account here, we've got a starting balance of $32,000 and an ending balance of $40,000. Well, it's pretty easy to see what occurred here in this account. The company recorded $8,000 of depreciation, didn't it? And if you think about the debits and credits that are involved, that would have been a debit to depreciation expense and of course an increase to accumulated depreciation. And most likely that explains the fluctuation from one period to the next, all right? Now, in order to figure out what we're gonna do with this on the statement of cash flows, we need to really, again, go back and go, okay, well, what is the purpose on the operating activities section? What is the purpose of this section? What are we trying to do in this section? Well, we're trying to reconcile from this accrual-based net income, to a cash-based net income. And what you have to ask yourself is you say, well, okay, well, let's think about this. When we recorded this entry back here for the year, we increased depreciation expense, didn't we? Right? Now, was there any cash involved in this entry? The answer is no, right? And I actually put the cash account here just to illustrate that there's no cash involved in this entry. This is what we call a non-cash accounting entry, isn't it? So if we think about this, really, the $8,000 of expense we recorded using the accrual basis. But here's the trick. If we were using the cash basis, would we have recorded depreciation expense at all? The answer is no, right? Because remember, under cash basis, we only record expenses when cash leaves the door, right? Physically leaves the door. In this case, that's not what happened, was it? So it's a non-cash entry. So we have a difference between the accrual basis and the cash basis here. So I always like to visualize this. I don't know if this will help you, but if you go back to the income statement, I'm sorry, back to your, well, actually, let's go to the income statement. Go back to the income statement. This is a good way to do it. And you ask yourself, okay, well, let's take that $8,000 out of the income statement, right? Let's say we're using the cash basis. Let's leave everything else the same. And let's take this $8,000 of expense out. Let's just zero it out. What would happen to your net income? Well, if you take $8,000 of expenses out, right? Wouldn't your income go up? It would go up by $8,000, wouldn't it? Or your income would have been higher by $8,000, all right? So another way to say that is, you know, in this particular, if you're just isolating this out, if we were using the cash basis, our income would be $8,000 higher, right? So if on the statement of cash flows, you're trying to reconcile from an accrual basis net income to a cash basis net income, we're going to add that depreciation back in. We're going to add to it, right? We're trying to reconcile from an accrual basis to cash basis. We're saying the net income would be $8,000 higher. So that explains why we're going to add that amount back. All right. That doesn't make sense. Make sure to go back through that illustration again. I've got some additional notes in there. Pretty much everything I just said is kind of written in there. So sometimes it takes a couple times to go through it.